One of the most sought after resolution options for those who owe back taxes is the IRS Offer and Compromise. Today I'm going to go through with you some of the eligibility requirements for the offer and discuss how the IRS goes about determining whether or not somebody qualifies for this program. The first thing we want to talk about is what is an offer and compromise. An offer and compromise is a program offered by the IRS that allows taxpayers to settle their tax debt for less than they owe. For eligible taxpayers, this program can be a way to significantly reduce your tax debt and make it more affordable to pay and resolve any of your outstanding back taxes. However, one common misconception about the offer and compromise is that people think that just because they owe back taxes, they qualify for a settlement. However, this is not the case. Not everyone qualifies for an offer and compromise. There are many tests, circumstances, and factors that go into determining whether or not a taxpayer that owes back taxes is going to be able to qualify for this program. In 2012, the IRS rolled out their Fresh Start initiative. Through this program, they expanded the offer and compromise, making more taxpayers eligible and making it easier for taxpayers not only to qualify, but to follow through with the payment terms of the offer and compromise. So the first question that everybody wants to know is, are they going to qualify for an offer and compromise? There is essentially a three-part prong test, I would say, for determining whether or not you're going to qualify. The first thing that you're going to look at is the amount of taxes owed. Generally, a taxpayer that owes more than $10,000 is going to qualify for this program. However, it's contrary to what you would think, it's easier for somebody that owes more to get an offer and compromise than for somebody that owes less. Another thing that needs to be looked at is the amount of your monthly income to your monthly expenses. The IRS is going to look at both the income coming into your household along with all the expenses going out of your household to determine whether or not you have an ability to pay on your back taxes. The third thing that the IRS is going to look at is the equity in your assets. They're going to look through what you own, what you have, and try to determine if you can use any of those assets to pay off your tax debt. This type of analysis is going to be done for every taxpayer that tries to submit an offer and compromise. We've had a lot of people that have come to us and said, hey, I owe tax debt, call the IRS for me and offer them $20,000 to settle out my $200,000 in tax debt, see what they say. And unfortunately, although that sounds simple, that's not the way that the IRS works. Instead, in order to go through the offer and compromise, you're going to have to provide information not only on your monthly income and expenses, but on all of your assets. The IRS is going to take all this information and use it to perform a mathematical calculation to determine whether or not you qualify for the offer and compromise based upon the amount of taxes that you owe. All right, so now that we know what the IRS is looking for to determine if you qualify for an offer, let's get into a little bit about how an offer is calculated. So the first thing that the IRS calculates is called your reasonable collection potential, or your RCP. And basically what this is an analysis of your monthly income to your monthly expenses. So the IRS is going to want to know everything that you make, everything that a spouse makes, if you have a roommate, if you have children that are receiving any type of income. They're looking at the full amount of income that's coming into your household. Against that, they will weigh your monthly expenses. So again, your full monthly expenses. Now the catch to this, of course, is the fact that the IRS has what are called IRS national standards. So these are the amounts that the IRS states that they're going to allow for an expense. So for instance, your food, clothing, and miscellaneous expenses, there's a capped amount on that based on what the IRS believes your family size should be spending a month, and that's it. So if you're spending more than that amount, they don't count it. The same goes for a car payment, housing expenses, and also your automobile expenses. So a lot of taxpayers will run into a situation where, although their actual monthly expenses equal or exceed their monthly income, the IRS allowable expenses don't. The next thing that the IRS is going to look at is your equity in your assets. So they're going to look at your house, and let's say you have a $100,000 house and you've got $50,000 owed on it. The IRS is going to look and say, hey, there's some equity here that can be used to pay our taxes. Although they're not going to then take and require you to sell your house, what they will do is take that amount of that equity and include it in the amount that your offer's for. They do allow some exemptions. For instance, they allow you to have up to $1,000 in a bank account. They allow an amount for your vehicle. They allow an amount for income-producing assets. So there are some exemptions to the amount that they'll include in that equity, but that number will then be used as part of the amount that you can pay towards your offer and compromise. Another thing that needs to be taken into consideration is the statute of limitations. One, this is told while you file an offer, which means that the IRS will have that additional time to collect against you once your offer is completed if it's not accepted. But also they look at what is left on your statute for them to collect against. So if 2 years of your statute is run, the IRS is going to look at how much tax you owe versus how much you can pay a month through your RCP and your equity to determine whether or not you can full pay your offer and compromise within the statute of limitations. So when you file an offer and compromise, you're going to fill out several forms for the IRS. Depending on what type of offer you're filing, you're always going to have a 656. This lists out all the different tax types that you are requesting relief from, the years, and also provides your personal information and the amount of your offer along with your payment terms. And then you're going to provide, for an individual offer, Form 433A OIC. This form is where you're going to list out all of your income, your expenses, and your asset information. So not only are you going to fill this out and send it in, you've also got to attach to it support for all of the different items that you have and that you're stating and claiming. So what type of information does the IRS look at for the offer? They're going to look at your wage slips. They're going to look at your W-2s, back tax returns. If you're a business, they're going to look at profit and loss statements. They always request bank statements. And from this, one thing that they also determine is your future earning potential. So some taxpayers, although they're not making a lot of money now, have a lot of future earning potential. A doctor who just finished med school and hasn't made any money because they've been in school is obviously going to have a lot more future earning potential than a senior citizen who's just gone on to a fixed income of Social Security. Same thing for your expenses. Always the bank statements. They're going to look at copies of your bills. They're going to look at any leases. If you have a mortgage, if you have any type of car, paperwork, anything you have as far as loans, all that type of stuff is going to need to be provided to the IRS. With your assets, you're going to have to provide your titles to the items that you own. You're going to have to provide your insurance statements. They will do a credit report. They'll do a title search. A lot of people, they'll have IRS come back and say, what about this vehicle? And they'll say, I haven't owned that thing in 5 years. But if you had a title on it, it's likely going to come up in the IRS's search. So that's why it's very, very important when you fill out this paperwork that you make sure to include any and all items that you own, because the IRS is going to go through it and go through third parties in order to determine that everything that you've supplied to them is accurate and complete. A lot of people also ask why the IRS has the offer program. They want to know why the IRS would ever grant tax settlement on your tax debt when they could instead just continue to go after taxpayers. The reason for the offer program is because occasionally it's in the best interest of the government to allow somebody to settle. So in situations where the IRS looks at your income and your expenses and they determine that you don't have the resources to pay back your tax debt within the collection statute, they would rather settle that out and get something now as opposed to continue to chase down a taxpayer over the next 5 to 10 years in attempting to collect against this debt and spending that extra time, expense, paperwork, manpower, trying to collect on a debt that they're not going to collect. So often the IRS is going to look at your tax debt and try to determine if you have the ability to full pay it. If they think that you cannot and will not be able to in the future full pay your tax debt, then they're willing to settle out for this lesser amount in order to collect some money against your debt and clear the books and the time and the manpower to go after somebody else who has the ability to actually pay their debt off. So, basically, the process for filing an offer in compromise is, as I stated before, you're going to complete the required forms. That's your Form 656B and then your Form 433A for an individual offer, or a Form 433B if you're filing it on behalf of a business. You're also going to attach to that a check for the filing fee and the 20% down payment, along with all of your supporting information requested by the IRS. Once that's done, you're going to send that all into the IRS. One thing that you need to make sure of before filing your offer in compromise is that you've gotten into compliance with the IRS. This means that all outstanding tax returns have been filed and that you are current with paying your current tax liabilities. So that means if you're a W-2 employee wage earner, that you're going to have proper withholding. If you're self-employed, that you've got your estimated tax payments being timely and properly paid. After you've filed your offer in compromise, you'll receive a letter from the IRS stating that they've received it and an estimated time on when you'll be contacted. This letter is an estimate. I've seen them contact people months before or months after the date on that letter. So if you don't hear anything on the exact date of that letter, you don't need to panic. It just means that it's likely not been assigned to somebody. However, you can always follow up with the IRS if you're concerned as to why you haven't heard any contact. Once your offer is assigned to an offer specialist, you'll receive either a phone call or a letter from them stating where they're at. They're going to review everything that they've sent and make a determination as to whether or not they need additional information, whether they're going to accept your offer, whether they're going to reject your offer, or whether they're going to increase what they think your offer amount should be. At that point, you can either accept it if they've accepted it, or you can accept the increased amount. If they've rejected your offer, then you do have the option to take the offer to appeals and have someone else look at your offer in compromise. Just because you filed an offer in compromise does not mean that it's going to be accepted. A lot of times people will file an offer and it may take a year, year and a half before you hear from anyone, and in that time things have changed, or the IRS may determine that although you don't have money, you do have a future earning potential, and therefore it's not in their best interest to accept an offer in compromise. If you find yourself in a situation where the IRS is not accepting your offer, there are other options available to you. You can set up an installment agreement, either based upon the amount of tax that you owe or based upon your ability to pay monthly. If you have no ability to pay, you can enter what is called a currently non-collectible status, which is basically a temporary status that the IRS allows no payments because it would cause you a hardship. So instead, they essentially shelf your file and then we'll review it at a later date to determine if your circumstances have changed or if you're able to now make a payment. Another option not a lot of people are aware of is bankruptcy. Certain taxes are eligible for discharge in bankruptcy, and for some taxpayers that don't qualify for an offer in compromise or can't afford to pay the amount of the offer in compromise, they are eligible for a bankruptcy. Another thing that you need to look at is your statute of limitations. The IRS generally has 10 years to collect from the date of assessment. So for some taxpayers, enough time's gone by that that statute of limitations will run and they'll no longer owe that tax debt. If you owe back taxes and want to determine if you qualify for an offer in compromise, feel free to contact our office at 866-668-2953 or visit our website at austinlarsontaxresolution.com. On that site, we have a lot of other additional blog posts regarding the offer in compromise and other resolution options for handling your back tax debt. Thank you. Have a great day. Bye.